If you take a regular customer, what is the biggest asset? Where do you borrow the most? Typically, it's a housing loan. The second thing we decided is listen, where is the gap in credit? It is certainly in the middle to bottom end of India. We will actually serve the middle of India and we will serve a full suite of products. So, what does he need? We already had unsecured, we added affordable housing, we added a business loan secured, which is loans against property, we added two wheelers, we added gold loans. Recently, we have added used car, and now we are going to add credit line on UPI for the short term need because we were very sure that this segment in the middle of India needs to be served.
Bajaj Finance, in the 2 quarters back, in a con call, I read that 11 out of 18 MSME sectors are struggling financially. And like I mentioned earlier, your teams would be sharing data with you, which you would be reviewing. So, what is really happening in the MSME sector, despite the economy growth? The net interest margins for you as a small finance bank would be in the range of 5 to 6%.
6.6.
6.6%. For a proper bank, it's around 3% on average. So how are you going to transition from a high margin, low predictability business to a high predictability, low margin business in a few words?
Jana Small Finance Bank is building a deposit-led, digital-first bank for India's underserved, from micro entrepreneurs to small businesses and salaried first-time borrowers. With a loan book of over 33,000 crore rupees and a rapidly growing CASA base, Jana has moved far beyond its microfinance roots into a full-scale retail bank. Improving asset quality and falling funding costs are now driving a shift to exponential profitability. Today we speak to Ajay Kanwal, who is the former regional CEO of Standard Chartered Bank. He joined Jana in 2018 when the entire industry was going through a crisis. In today's episode, we break down Jana's business model, competitive edge, and what it could mean for investors.
Mr. Ajay, thank you for being here. Before we get on about your journey, I want to take a moment to understand Jana Small Finance Bank. This is a company that have held different licenses throughout different stages, and there will always been pivotal points when you graduated from one license to the next. The founder started off as the intention was a non-profit back in 2007 and started off as an unregulated lending entity, which eventually transformed into an NBFC, then eventually transformed into a MFI, Microfinance Institution, and then now it's a small finance bank. Lately, you've been trying for a universal bank application, universal bank license. So during this entire journey from 2007, let's say 2026, what has been the different pivotal points where you decide, let's go from here to here or here to here? And what are the different difficulties that you had faced throughout this journey?
So, first, a very good morning to you. Uh, so, Ramesh Ramanathan really founded the organization. Uh, he began as, and this is way back in the early 2000. So, he began it like an NGO with the whole idea of financial inclusion. And then he figured out that if he really has to scale it up, he has to formalize it. So, that is why he formalized into an NBFC, which, if I remember right, is 2008. And then the journey began, from 2008 for him and his team. And they really built a very large pan India presence. So when I joined them in August 2017, the microfinance business that they had was in like 22 states, 650 branches, 15,000 people. So scalability, attracting capital kind of necessitates you to move into a more organized, fit for purpose, visible organization. So that was a reason he moved into a obvious structure, which
Okay.
was an NBFC, MFI. Rightfully so, he did feel that, serving financial inclusion has to go beyond an MFI
Right.
because I think people misunderstand financial inclusion means giving unsecured loans. Ultimately, if you take a consumer, he has a lot more needs than unsecured loan. So I would like to build my house. I'd like to furnish my house. I'd like to refurbish my house. I need a mobile. I have an educational need. I have a marriage need.
Yeah.
So somewhere I think in this overall thinking of financial inclusion, we tend to take it as what is an MFI doing, but I think it's much broader.
Right.
So to serve that, he applied for a small finance bank license, which he succeeded. And so he had that at hand. And that's a journey. And then the next step, which is when the small finance bank license were issued, the policy document did have a graduation part to a universal bank.
Okay. Okay.
So that's in the original document, is there in the uh, updated version which our regulator has put up. So I think in everybody's mind that there was a path where you begin with a small finance and at some point you would graduate to a universal bank because that's a natural path.
Yeah.
It doesn't take away the basics of who you are,
Okay.
right? So that doesn't change. But what does happen is you get to play at a different scalability, and which is why we did apply for the universal bank. So that's a very, I do think there is logic in how you kind of move the various.
Yeah. When you came in 2017, you are a MFI. Okay. And in 2016, something pivotal and something that almost destroyed this company really happened, demonetization. How did demonetization really increase in the credit slippages and the GNPAs? And secondly, now you're transitioning from a small finance bank to a bank. How do things change in terms maybe your advanced profiles, maybe your asset quality, the percentage of secured and unsecured? What I'm trying to understand is throughout these three different licenses, MFI, small finance bank, and a bank, how does things really change? And secondly, the demonetization aspect.
So listen, I was overseas and I only came here in to advise Jana on behalf of the private equity, which is CPG, in June 2017. And what looked to me as the reason why things had not done as well as people had imagined was that at that during the couple of months, a lot of confusion, loss of job, business, etc. And a lot of the MFI customers don't have very strong balance sheets.
Right.
So they can't sustain a repayment if they really don't have the income coming in. And I think that did lead to a lot of increased gross LPAs and net NPAs for the institution.
Okay.
Now, before that, which is in 2016 itself, they had the in principle go ahead. So they had the license, they formalized it in April 2017. So I think the organization bias was always to move to a more diversified and more holistic organization. This kind of just delayed it a bit.
Okay. Okay.
Um, so now the big question is, what happens in an SFB? That depends on your strategy, right? Because the regulator has given you a scheduled commercial bank license. So scheduled commercial banks are the large private sector banks, PSU banks, and also all SFBs, which means that the regulations and the supervision of RBI is identical, right? There's
Okay.
no change really. Uh, what you really have to do is you are defined in terms of some parameters that you have to be differentiated. So the first parameter that the regulator wanted was that in the past our priority sector lending had to be 75%.
Okay.
The current governor has dropped it to 60%. So if you take a large private sector bank or a PSU bank, their priority sector is 40%.
Mm-hmm.
So that's one key difference. Second difference is that your loan book needs to have 50% or more of less than 25 lakh rupees loans.
Okay. Okay.
And third is something around, sophisticated or derivatives, etc., which
Mm-hmm.
is not really an issue. Our capital adequacy is higher at 15%.
Okay.
So that's a base capital we all have to maintain
And for the banks?
for the bank I'm talking of. So other banks, typically you'll find the banks because it's a bit variable around, what's your ops led weightages, etc. They would be around the 11 to 12%.
Okay.
So that would be kind of where the base levels are. So fundamentally, the thinking was, these are new organizations. They're serving financial inclusion. They should be encouraged because whether it's India or any part of the world, the real challenge is penetration of credit in the middle to bottom end of the pyramid, right?
Absolutely.
So to do that better, these licenses were issued and they were shown a graduated path saying after some time, which was then said as 5 years,
Mm-hmm.
you could, based on the conditions, apply for dropping the word small finance. You are a scheduled commercial bank, you continue to be a scheduled commercial bank, but the word small finance drops off.
Okay.
Um, and of course, some changes around the priority sector will fall, etc. Um, so that was the basic bias. Now, every small finance bank took its own decision of what they wish to do.
Yeah.
There is no prescription. You could continue doing MFI as much as you wanted,
Mm-hmm.
or you could take a pivot away from MFI. It's all choices people have made, and all depends also on what your background was.
Right.
I think for us at Jana, we were clear from the start that we had to build a 80-20 bank, 80-20, 80% secured assets, 20% unsecured assets. We were nearly 100% unsecured
Wow. Back in.
because we were a full MFI.
Yeah,
It's
yeah.
all unsecured loans, right?
MFI is only
Yeah,
unsecured
these are all
loans.
unsecured
Okay.
loans
Okay.
that you give.
100% back in 2017, 2016 before you came.
Sorry?
Before you came, it was
Yeah,
100%
the
MFI.
MFI, right? You
Yeah.
really, that's what you end up doing in MFI largely.
Okay.
We did have some small ticket, but they were also unsecured to, small shopkeepers, etc. But see, our bias was two, three very simple ones. If you take a regular customer, what is the biggest asset? Where do you borrow the most? Typically, it's a housing loan,
Mm-hmm.
right? All of us will have the biggest loan in our lives
Would be the
will be a housing loan.
Yeah.
If you're a businessman, your biggest loan will be a housing loan or your business loan,
Mm-hmm.
right? So that's basic. Your next biggest loan could be a car loan because of ticket size. It could very well be a two-wheeler loan or an unsecured loan. Our personal balance sheets don't have 80% or 90% unsecured assets.
Mm-hmm.
So if the bank has to reflect a customer's balance sheet, then for us 80% secured is the right answer. So that is where we began from, which
Okay.
is a consumer is not normally so unsecured, neither is a business owner, right?
Right. They always have an asset to back up.
We always have
Mhm.
assets, and those assets are our biggest
Liability too.
liability too. I mean, let's say you have bought a lot of gold, you'll end up taking a gold loan first before you take an unsecured loan because the pricing is better.
Yeah.
So first important for us was 80-20. And remember, that's a very important call because secured assets tend to give you lower margins.
Yeah. Yeah.
So we consciously said we will go into a lower margin bank, but a resilient and a predictable bank because once you're secured, your gross NPAs, net NPAs become more sensible.
Absolutely.
And then you have less of volatility in your earnings. The second thing we decided is, listen, where is the gap in credit? It is certainly in the middle to bottom end of India. We will actually serve the middle of India.
Okay.
And we will serve a full suite of products. So what does he need? We already had unsecured. We added affordable housing. We added a business loan secured, which is loans against property. We added two-wheelers. We added gold loans. Recently, we have added used car. And now we are going to add credit line on UPI for the short-term needs.
Okay.
So we by design chose products that met this segment and not launched everything. Because we were very sure that this segment in the middle of India needs to be served. And you get operating leverage if the customer actually takes multiple products from you. On the deposit side, of course, we had savings, recurring, current accounts. We have a full suite of mobile bank, internet bank, QR codes, UPIs, POS machines. So we're very clear in our minds that we will play in a segment which we think is underserved. It will be secured in nature because that is the real balance sheet of any business or individual anyway, and will be very digitized.
Okay.
So those were our three big, simple start points. And then we chose not to do many things because fundamentally, when you start, you really want to do a few things, you want to do them well,
Yeah.
right?
Yeah.
And so we said, okay, that's where we're going to really focus on. That's what we are good at. And that's what will grow. And that's been our journey.
Okay. When you switch from unsecured to secured, you already mentioned that your margins reduce because the risk that you're taking is low. So the interest you can charge them is also low. The net interest margins for you as a small finance bank would be in the range of 5 to 6%,
6.6.
6.6%. For a proper bank, it's around 3% on average. So how are you going to transition from a high margin, low predictability business to a high predictability, low margin business in a few words?
Okay. So first is we are as much a proper bank as any bank. So there is not much difference, right? It's the word small finance which connotes how our portfolio size is different.
Mhm.
And here is a classical thing, which is um, so let's take prime mortgage.
Okay.
I'm lending a 1 crore, 2 crore loan. Customer profile is very different versus I'm doing an affordable housing of 10 to 20 lakhs. Okay. One will have a lower delinquency, the other will have a high delinquency. One will have a lower return to the bank or the institution who's doing it, the other will have a high return. From a risk reward perspective, you have to figure out which one works better for you, right?
Okay.
And I do think affordable housing offers a much better risk reward ratio for a bank.
Okay.
Now, the other piece you have to look at is where is the opportunity? So, for a new bank to come in and say, listen, I'm going to compete at the high end where you need to have lines to developers to finance their projects, which I don't think so new bank would be stepping up there. I'm going to compete on low margin housing is not where you would like to start. At some point, we will get there,
Mhm.
but that's not how you begin, right? You begin with saying, where is opportunity in India,
Right.
right? Where is the gap? Where is the credit hunger,
Mhm.
right? Which fits your risk appetite.
Okay.
So for us was affordable housing as a start. That is our biggest asset book today. And so we began from there.
Mhm.
Also, then, if as you're a banker, you get to think about you want a customer relationship for a long time. Which asset is a 10, 15-year asset? It's a housing asset, right? Which asset is resilient over the economic cycles, or rather, I would say most resilient? It will be typically gold and housing,
Right.
right? So for us, was very simplistic, saying customer need, good risk reward. Certainly, that's and also ability to be with the customer and his family for many years,
Mhm.
right? Because over a life cycle of his loan, he'll have many other needs where you can engage him,
Mhm.
right? Which is where operating leverage is, which is where the stickiness is. So that was the bias which we went in.
Okay.
So again, I would think that one should judge banks not necessarily by high name, low names. It is by what segment is he doing business in. Is the risk reward trade off good? And if that is fine, you're welcome to do all businesses. So I would say if you do corporate lending, right, large corporates, your names are small, your ticket size is big. So your cost is low, your losses are low, but your margins are low.
Mhm.
You go into MSMEs, it's going to be higher margins.
Yeah. High risk.
To serve the customers, you need to have more folks in the bank, and your delinquencies or NPS will be higher than corporate.
Mhm.
But that doesn't mean that you stop doing this and only do that, and vice versa. You figure out that first is the dynamics good, and then you want to be diversified. You don't want to be in one segment all the time. So
Right.
as long as you play diversification, you understand what the risk adjusted yields. I think it's good business to be in. So I think just one parameter, which is high NPA, low NPA, is not a good judgment.
Yeah.
I think
Yeah.
a good judgment would be what is the risk adjusted yield the bank is earning? What segment are they playing? Do they have a right to win in that segment? Is the segment growing? Is that a good business to be in? I think that would be a good choice of a bank.
So if there are 21 banks, private banks, and around 10 PSUs, public sector banks, and maybe 10 small finance bank, if I'm not wrong. Is his numbers accurate?
More or less,
More or
about
less.
70 to 80 scheduled commercial banks.
Okay. So all these banks, what makes them unique in one way or the other is where they intend to position themselves in this entire spectrum. Versus high risk, low risk, how many branches do I need, who I need to cater for. That's what you're saying. That's what you're going for an 80-20, going for two-wheeler, going for gold loans, going for more focus on affordable housing. That's what you're trying to say, right? And that's what makes you unique in the long run. Okay.
See, for us was you can be a product led company
Yeah.
or you can be a customer led company.
Okay.
For us was a customer led bank,
Okay.
which is why I said that we built everything around what the customer wants.
Mhm.
Before I go to the next segment,
Okay.
right? Which is why I said, what does he not have? Last year we launched used cars and not new cars,
Mm.
because used car is where we think our customers need that more.
It's
It's not like none of our
middle
customers
layer of
need new
the
car.
yeah.
We will get there, but first is a used car,
Okay.
right? First was a two-wheeler. We also did a used two-wheeler. Anything that the segment wants so that you can say, okay, this bank is my bank. Everything I need is available in this bank. So it was not a because one way you look at financial services, there are big housing companies, big unsecured loan companies, and some people have large credit card businesses. You kind of tend to define companies based on their key product. And our bias was, listen, ultimately the bank is for consumers, right? And what would a consumer like? Would he like to go to three, four different financial institutions to get three, four, or five, six needs met? I think those days are gone. People would like to go to one place, get everything sorted, right? All of us prefer going to malls and not to individual shops.
Right.
Right now, we are all preferring to even buy everything online rather than even go to a mall also, right? So we are moving up that in a consumer's head. So in our mind, what does the consumer want? He would not like to go to four different places, four different KYCs, four different repayments. My savings account is here, my fixed deposit is here, my housing loan is there. It is not at all convenient for him. So we said, okay, take one segment, build everything for that segment,
Okay.
make
Okay.
you feel at home.
Understood.
And I think to us, that was our real differentiating point, which is build around the consumer, keep it secured, middle India, and which is why we're at 185 cities. So it's a very different model from a concentrated high metro model.
Okay. Okay. So if the if you're transitioning from the assets, like I said, the three areas that you're going into, the GNPAs would naturally reduce because they've got an asset, and so will your provisioning, which will strengthen the balance sheet. And somewhere in a con call, you said that you're seeing these stress really peaking because 2024 was a hard time. Now you're seeing the stress peaking. Why do you say the stress is peaking despite your provisioning being at like 70% of the GNPAs?
So our stress in the last 18 months has been on the MFI book,
Okay.
the microfinance unsecured book, where there has been an industry-wide stress.
Yes.
And typically when the stress is visible, you stop, disbursing loans at a high, you just cut down your disbursals. You focus on meeting customers and focus on collections. So if you see the entire microfinance industry for the last 18 months, the balance sheet is shrinking.
Yes.
So has been our balance sheet has really been like minus 8-9% since March 24, which is the way it works, right? Things are under stress. So you slow down, you tighten up, you focus on collections, and then you provision things that you think you can't collect. Then everything stabilizes, which means the fresh flows slow down. Customers, there are still very good customers, right? Because so let's say 5%, 7% bad customers doesn't mean the balance 93 are not good, right? They're good customers. But then you kind of solidify what you are seeing as a challenge. And once that is done, then you start your disbursals and there's enough and more good customers. But the way to do that is you first make sure that this whole flow of customers who really have been leveraged to a point they can't afford it, or some have even behavior issues of why they're not paying you. Once that is sorted out, then you start the disbursal. We could see the trend come down, and our December results will be out in a couple of weeks, and you will see that very apparent. That which what we have been saying, which is the whole stress is falling off. In fact, the microfinance book actually saw a growth
Mm-hmm.
in the second quarter,
Okay.
which was also signaling that we have that confidence to start growing.
Okay.
And again, so MFI is about roughly 27% of my book. 73% is affordable housing, LAP, MSME, gold, two wheelers, etc. And that is doing extremely well.
Right.
Um, so yeah, stress times kept us profitable, not as much profit as that we could have made, but something that is now behind us. And then we just continue doing what we're doing.
Yes. So your teams would be sharing reports with you, and you would be reviewing it, let's say, once a week or once a month. And you would have great insights on what is exactly happening in the rural economy and the urban economy. What are people taking loans for? On what loans are they not able to pay? I'm talking about the MFI space, not gold, not affordable housing. So, despite the economy doing very well in 2024, okay, even 2025, I'm saying 6 to 8% growth is okay. where are consumers actually facing the issue?
So it's less economic, it's more personal, I feel, which is people have got leveraged,
Okay.
and those are personal decisions people make. So I figure out that I can't control my expenses. I think a loan is available, and that let me try a new business. Let me try and expand a business. So I think people make personal choices around how much leverage do I want to take up as an individual. And if the institution in front of you is unable to block that, they do tend to be over leveraged. Now, sometimes people are leverage up and it works well,
Yeah.
but I guess most times you're over leveraged, it doesn't work well. So it's less to do with is there a rural sector problem, or I think it's just a question of where were the loans dispersed the most.
Okay.
And the loan dispersal, if you watch post COVID, were largely in the rural areas, because in the rural areas was during COVID, the metros didn't perform well, the rural did. So the natural shift was out towards rural. So the rural obviously got a lot more liquidity from all the 100 odd players in this in the segment. And I guess the discipline, both at the borrower level and at some time the institution level, did not catch the leverage issue, and which is why it is so. It became a challenge for all of us,
Okay.
because in the MFI space, suppose I do a good call on lending and I give someone money. If he goes somewhere else and borrows and he leverages up, I can't stop it.
And you don't even get to know, do you?
We do get to know if you check the bureaus,
Yeah.
the credit bureaus does show the leverage, but there's not much you can do. The money's out of the door anyway,
Right.
right? So that business tends to have that disadvantage. Given what I see in the industry and what I talk to my various peers in small finance bank and I hear the MFIs, I think people have understood that it's been a bitter lesson for many. So I think it'll be a much more disciplined industry as we go forward.
And do you think you can stay focused on the larger goal the chairman had when he started the company of that financial inclusion? Because now most of the population has a PAN card or has has a not a CIBIL score, but they're on the system, unlike let's say 10 years back. So, and if you're going into secured, do you think this goal can be accomplished? Number one. Number two is if someone who does not have much of an assets want to take a small loan of let's say just 50,000 rupees, 1 lakh rupees, it will naturally be unsecured loan. So if all the small finance banks are navigating away from it to a secured gold loan space, what about those consumers? Who will take care of them?
So let me go back to what I first said. I said 80-20 and not 100-0,
Okay.
right? So I think we are all very conscious that consumers will have unsecured needs. They will be legitimate. They should get that. So I think to us, that is not lost. We should all avoid consumers who are over leveraged.
Yeah.
That's the primary bias. And that I could say even for a housing loan customer, right? If I find a housing loan customer who's taken a lot of personal loans and is defaulting, I will not give him a housing loan
Yeah.
because I know his cash flow is very tight.
Yeah.
So I think it's not about not having, not doing unsecured loans is what we're aiming at. That's not the bias. We are saying it is 80-20.
Yeah.
Given what's happened in the environment, that 20 we are now putting under the guarantee programs of CGTMSC and CGMFU.
That's like taking insurance, right?
That is the insurance.
Okay.
So at least the event risk, if any,
Yeah.
which we can't foresee,
Yeah.
is covered.
Okay.
Because I have a responsibility both to my depositors first,
Yeah.
which is to make sure the bank remains sturdy and safe. So we are taking insurance, roughly about, I think, by the time we finish this year, 70% of our unsecured book
Okay.
will be under the guarantee programs.
Okay.
I think we've reached around 48 odd by September. It'll increase as we announce the December results. So it'll be a very interesting bank, which is we will have roughly at some point very soon. So let's say in the next 18 to 24 months, 80% would be roughly secured,
Yeah.
20% odd would be unsecured, but that would be under a guarantee program.
Understood. So you would have maybe 7% that is unsecured without
So
an
left
insurance.
unsecured without guarantee will be 5 or 6%.
Okay.
Because 80
Yeah.
like 20, let's say last 5%, which may be a timing matter.
Right.
So we'll be largely covered in terms of what it requires to be a strong, resilient bank with good NIMs.
Mm-hmm.
The NIMs are coming for being retail in nature. It is not about the risk.
Mm-hmm.
right? So
Understood.
again, if I do affordable housing, it is a last mile business. It's an informal customer. I need to do a physical verification. I need to make sure there's a lawyer and a valuer, right? And so when I do retail business, I get better margins.
Mm-hmm.
So our bias is work harder, do the last mile work, get better margins, and reduce risk.
Okay.
And
Okay.
it doesn't mean we are stopping unsecured. I'm just making sure that in our heads, it is the right proportion for the bank to have. And given what we've seen in the last few years, like COVID is unpredictable by us, right? If something else happens, I don't know. So, which is
Absolutely.
why we're ensuring it.
Okay. Okay. So that's a nice way to put it. So you're having the 20% unsecured where you're catering to those areas which really needs financial capabilities while you're securing yourself as a bank by taking that insurance by 80% migration to a secured book. So you are there for the long term rather than have crazy volatile times that you had in the past.
And see also how we understand financial inclusion, Shriram. Suppose I help somebody build a house, he saves on the rent,
Yeah.
right?
Yeah.
It's better quality of life for him and his family,
Yeah.
right? It's something he leaves an asset behind for his kids. I think that is as much financial inclusion as giving an unsecured loan, if not more,
Yeah.
right? If you give somebody a two-wheeler, it becomes a vehicle you drop the kids to school and you take it to your business. In medical emergency, you can use it, so on and so forth. So, I think this whole financial inclusion should be understood as availability of credit, right? Where people need it.
Yeah.
It
Not
doesn't mean MFI is financial inclusion, everything else is not. I would argue the other way around, saying, I rather help a customer build an asset, no.
yeah. Not to
Because
buy
if
an
you give
iPhone.
unsecured, there is a chance
Yeah.
that he may do something with it which may not be very sharp.
Yeah.
Correct?
Rather than like give someone money unsecured to buy an iPhone or an expense.
Yeah.
Yeah.
I mean, maybe that is valuable for him, but
Yeah.
I'm saying, it can't be big ticket, right?
Yeah.
I mean, I rather have him build assets
Mhm.
or I help him build business, which is why the other focus was on MSME,
Yeah.
saying, listen, let's create um, opportunity for customers to make money from my money,
Mhm.
right? Also, it becomes a very good job creation opportunity. So,
Okay.
let's say in affordable housing, I was reading somewhere 100 affordable houses creates 40 jobs,
Okay.
which is where it is, right? So, we are in a way, when we say we are doing a home loan, that home is built by a lot of people, right?
Right.
And those people are getting employment, and that's business churning around, right?
Absolutely.
Uh,
It's got the
so,
multiplier effect.
so when you do assets, like I would say, yeah, when you're doing a two-wheeler, somebody is manufacturing, somebody is distributing, somebody is servicing. There's the whole ecosystem we support, and there's a lots of component manufacturers and all. So I think when you do assets, you are really making sure the whole system is also getting supported.
Absolutely. So you mentioned MSME, and that triggered a thought. Uh, Bajaj Finance in the I think 2 quarters back in a con call, I read that 11 out of 18 MSME sectors are struggling financially. And like I mentioned earlier, your teams would be sharing data with you, which you'd be reviewing. So, what is really happening in the MSME sector despite the economy growth?
So first, without commenting any particular
Please.
organization,
Yeah.
first is we chose not to do any unsecured business in MSME
Okay.
by design. We chose to do businesses which are at least 3-year plus vintages, do have some assets, and we would lend to it. So we've been a bit more careful in what we do in the MSME space, fully realizing that businesses being small in size could have more volatile behaviors. Then third, we are a very focused organization of where the money is going.
Yeah.
So we focused on sales invoice discounting, purchase invoice discounting, bill discounting, bank guarantees, because there you're very sure of what is really happening,
Hmm.
right? Um, our next move is now to help working capitals, CCODs. And again, these are functioning companies who want to grow.
Right.
So it's a very measured, focused way of approaching an MSME segment. And within that, we do sectors which we are more careful of, sectors we are, going to avoid. So we are very building it very nicely. So, and you have to do that very carefully because sometimes, people grow because they think there are margins. We go back to first principles for our sake. What consumer are we trying to bring into the bank? We would like to do multi-product with them, and we would like to stick to our 80-20 principle. So once you put that in that lens, you will tend to do a certain amount of business, right? And so we are not see. I wouldn't say there is there is, all segments are not stressed,
Yeah.
and customers are getting leveraged. But all depends on whom you have decided to make your customer, what kind of offering you have made to them. And I must tell you, as I sit with you, we are really growing that business.
Yeah.
I'm very comfortable with that business.
Yeah.
But there is a way we approach it, and we are very steady in that approach.
Yeah. I wanted to point this to a very economic perspective here. Like there is stress in the economy. Let's not deny it. Even you're not, I'm not, nobody is. There is stress in the economy. It's some parts, in some pockets. Some parts are doing really well. Let's say financials, gold loans, and manufacturing bits. They're doing really well. But there are stress in some other sectors. Which are the areas that there is stress? At least 3 or 4 sectors that you're seeing stress.
She all depends on. So I'll give an example. I think the EPC sector,
Right.
where your contracts could get delayed, contracts could not get executed. I think that's one sector that we watch out is challenged.
Yes.
We do think post the tariff discussions, some of the
Export.
areas, export areas, have got challenged,
Yes. Yes.
right? Um, but remember, it's about not every single person in that business is challenged,
100%. 100%.
right? And then that comes back to the bank making the right choices of how would you safeguard yourself. I would not say that every exporter in India is challenged after the tariffs, but the reality is most of them are doing well.
Yeah.
A very small percentage is challenged.
Yeah.
As long as you are not in that small percentage, you as a bank are fine.
Yeah.
Right? Not every EPC is not something you would like to do.
No, of course.
But of course, you got to make your choices. And I think that's where your pace of growth matters.
Right.
Yeah. That listen, growth for the sake of growing is of no use. What is more valuable is you should have growth which is on strategy. Your customer fits the risk appetite you take, and you're comfortable, and you really want this customer to stay with you for a long time. So it's not a transaction you're trying to do.
Okay. So just to pivot, you did apply for the banking license, and it is a very time-taking process to get the license, right? And in October last year, the RBI did respond by saying that you have to fulfill XYZ criteria for you to make the next application. For this, we are sidelining. So, what were those factors, and how are you preparing to meet those criteria? What is the timeline to transition to a universal bank?
So our application was returned by the regulator. Cannot go into specifics,
Okay.
but certainly we would at some point announce what are the next steps on application. So our mind is very firm on becoming a universal bank. We think the advantage is really, Shriram, for a universal bank is it helps our liability franchise. Because see, unlike our asset franchise, our liability front is very different.
Absolutely.
So it's middle India for the asset piece with MSMEs, and it's middle India and above for the
Liabilities.
deposit side
Yeah.
or the savings account or current account side, because that is where the money is.
Yeah.
Right. And for a regular person who is not in banking or financial services, there's always a question, what does the word small finance mean? What kind of entity is it? Though we write scheduled commercial bank quite in bold terms, not everybody understands scheduled commercial bank difference. So I think for us, getting into a universal bank, which is shedding the words small finance, would really give our liability a big upside.
Liability meaning the quality of the deposits, the rates that you pay on the deposits will reduce.
Rates will reduce, volume will also go up. So
Right.
let's say I would look at Jana and say, okay, listen, I like the bank, I like the service, but I will not keep more money here. I will keep more money somewhere else.
True.
Right. So that will change.
Yeah, I would think that way, honestly.
Correct.
Yeah.
So I think by rather than expecting everybody will come this side, because we have a 7-8 year history as small finance banks. Not all small finance banks are similar. People will have different views depending on which bank they are witnessing. Very difficult for people to understand, oh, when they see Jana Small Finance Bank, this bank is 73% secured. How do they know?
They don't.
No chance. So they'll all go with the name.
Yeah.
So that's really where our mind is, and our hope is working closely with the regulators. We will solve this.
Yeah. there is a thing called CASA, right? Current account, savings account. So you're expecting that number in total deposits to go up because people who trust you and say you're synonymous to HDFC Bank or ICICI Bank and keep money with you, where you have to pay a lower rate, maybe 2%, 3%, rather than what you pay today here at small finance bank, because not many people are ready to keep the deposits with you. Even if they do, they'd keep 1 crore in ICICI and maybe 2 lakhs or 3 lakhs with you, right? So you're saying that the entire framework of transitioning from a SFB, small finance bank, to a bank is that your liability would change drastically. That is the deposits, the kind of deposit that's coming in.
So first I'll give you the number. Our total deposit business is now about 33,000 crores.
Right.
So that's I think, a reasonable number of people who trust Jana for the last 7.5 years plus we have been in business. And you're right, I do pay a premium over other banks, certainly the ones which are not classified small finance,
Yes.
though we are both scheduled commercial banks because it's the nature of how people view us. So premiums will come down, velocity of growth will go up, and I think that will be certainly in favor of our franchise.
Yeah.
And that's certainly what we would, hence, that's been our focus, and we are very committed to solve it.
You said 33,000 crores your total liabilities side.
33,000.
That is your deposits. In that deposits, what would be the breakup? Let's say fixed deposit.
I'll tell you, it's public also. It's 19 point some odd percent is CASA.
Okay.
Our aim is to get it to 30%.
Okay.
That would be a good number
Right.
for the first few years, because see, CASA is where you build slowly over the years. It doesn't happen overnight. We do think that getting to a 30% would be a good mark for us, and that's where we focused on. And we think it will be helped if we do have the universal bank license. Not that we are not succeeding in CASA now, but then the velocity and the pace can get better. It'll be less expensive and probably faster for us. That's how we think. But yes, I mean, even today with 33,000 crores of deposit, we still have roughly what, 10 lakh customers who bank with us with their money. And that's what, when they began with us in 2018, it was like, we were just started and, we weren't profitable then, but they trusted us. They got good returns. And always we see in our deposit business, we get more money from existing customers
Right.
than new customers.
Okay.
Because every passing year, every passing month, his trust is going up.
True.
Right? What is this entity? How well will it do? How much it will grow? Keeps getting more and more solidified as every day passes, and that's our aim.
Let's say I give you the banking license today, I don't have the power, but if I give it to you, what are the like 3 or 4 things that you would do differently compared to what it is today? You said that the loan side will stay as you look going for an 80/20. That's where your differentiation is. Besides that, what would it be?
So I think first will be the brand change.
Okay.
Right. It will mean in a way repositioning the bank so that it becomes more attractive to the deposit customers, current account customers, savings account customers. I think we think in our heads there is an opportunity for wealth management to be done more differentially.
Okay.
And I think we'll be more successful. So today we do insurance, we do mutual fund distribution, we do SIPs, we help people with demat accounts. We have a white label with Axis Securities on 3-in-1 accounts for trading, etc. So we have the ability of offering a reasonable amount of wealth management products, so to say, but it's not a full suite what we would like to do. And once we turn universal, we would really like to invest in that.
Okay.
So some things are strategic better, we feel, in a universal bank context. And that's what we would do.
Okay. So towards the end, I wanted to ask you, you are going into these, how does gold loan really work? I understand if someone is giving you 100 rupees worth of loan, you'd give around 75 rupees loan to them. Then GNPAs, when if they don't pay that interest for 90 plus days, it becomes GNPA. Write-offs never ever happen, right? In gold loan, is that right?
Yeah.
Write-offs
You should
never
have,
happen.
unless you made a mistake in checking the quality of the gold,
Okay.
very low likelihood of making a loss.
Okay.
And second is, unless there's a gold price crash, very low chance of making a loss. Typically, while we offer 75%, people don't borrow necessarily 75%. So weighted average of loan to value and a gold loan could be around 60-65% only.
Okay.
Because see, people are not like, okay, here is my gold, give me as much as you can.
Right.
They have a need.
Right.
I need 50,000 rupees, my gold is worth 1 lakh. I won't take 75, I'll take 50,000. Right?
Okay.
Because that's what I need. And I don't want to pay interest on 75 and I don't need the money. Most consumers are like that.
Mhm.
Most consumers pledge the gold to take it back.
Absolutely.
Nobody keeps the gold to default.
Yeah.
That or the
They'd
bank
rather
will
sell it.
auction it. Yeah.
Yeah.
So the auction percent is very, very low.
Okay.
And also we don't do, we focus on jewelry, which means that there is some
Emotional connect.
sentimental reason why he would take it back.
Right.
It is not something he's not attached to. It's like
Okay.
in housing, you're not attached to your investment property, but you're attached to the home you stay in. Similarly, if you're having jewelry, that's what you wear, and it could be a marriage gift, it could be your anniversary gift, something else. There is more value for you to, and that's something you like, right? You built it. You don't want to lose it. So we have seen very low reasons for
GNPA.
people to get the gold auctioned.
Okay. So here the GNPA would, let's say,
It's
one
only technical in nature.
technical nature, but NNPA would be zero. Who actually?
And like I said, if you're in the quarter end and something hasn't been auctioned, well, because there is a proper process of
Mm,
how you inform the customer, how do you release the notices, and then you go through an auction process, it takes time. So if you get caught in that time, so it's technical in nature, but nothing to really worry about. And it's a very good product to have for the bank, yeah, because customers who do need it, then like I said, don't go to another institution for the gold loan. You come to our bank for your savings account, or you have a fixed deposit with us. Why would you go to another bank or NBFC for a gold loan? You should do it very much within our bank. So we have out of our 820 odd branches, out of which about 230 are unbanked rural branches, unbanked rural centers. About 550 do gold loans.
okay. Okay.
Yeah, by design.
Okay.
And it's been a fastest growing business.
Absolutely. I said 200%, but it's a low base that you're starting from, right? So this affordable housing, can you tell me how it works? Is it you give money for off-plan property, or what is the ticket size of that affordable housing? And is it the properties that have already constructed, this person wants to move in and he wants to take a loan for that home? How does it work, affordable
So
housing?
it's so our first is our average ticket size is 12 lakh rupees for the affordable housing.
Okay.
You can take it to, I have a plot of land I want to build. That's a large percentage because typically as you go more interiors, which is tier 2, tier 3 cities, a lot of the people they bought the piece of land, they're waiting to construct it. So they will use money for that. They could very well buy a house which is on sale. Or third is I have a house, I've already done the ground floor, I want to build the first and second, my kids have grown, or my kids are getting married, or I want to do an extension to the house because my kids are growing. So you could have all three uses, which we are very happy to support. There's a On the business side, let's say I have a shop, I run a bakery and I want to buy the next bakery. I'll pledge this by my current shop and
Okay.
buy the next one.
Okay.
Simple, right? I have a home, I'm starting a business. The unsecured loan I want is 5 lakhs, let's example. That's not may not be easy one to justify given what's available in your bank statement or your ITR. Then you will tend to pledge your a home and say, okay, I'll raise 5 lakhs, I'll do my business, and at some point I will pay it back and you know release my home from the bank.
You said this example of a shopkeeper, right, who wants to extend his bakery. That person, let's assume he has not taken a loan before, he doesn't have a CIBIL score, and you are giving the loan just based on the existing shop that he has. Okay, so how do you decide the interest rate that you're going to charge this person?
So we have developed a lot of models within the bank which kind of works on. So what is the amount he's borrowing? Say my property is 100 crores, I'm borrowing 20.
Yeah.
That's another story. My
Yeah.
property is 100, I'm trying to borrow 70. That becomes another story. Two is what does his current bank statement show,
Okay.
right? What kind of cash flows does he have? What kind of repayment ability does he have? So that would be the second thing. And third, there will be a proper underwriting process done. Where will he put the money in, right? And the underwriter will give a feedback on what he thinks is a saleable or unsaleable business case, or more risky, less risky. So based on this, price will be decided. Um, See, the good thing about all the property-backed loans is they're longer tenor. So they tend to be low challenge on the cash flow. These are 5-year, 10-year loans. So these are not 2-year, 3-year loans. So you tend to have obviously lower EMIs. That gives you a chance of using a lot of the cash into whatever purpose you want to do.
Okay.
right? And then you have some time. So if your business works, your expansion works, your neighboring bakery you bought works, then all is very nice. Otherwise, you have time to really pay back. So I think it tends to be a good product for businesses.
Okay. And the credit cards, we never spoke about. Are you ever planning to go into
So
that?
we have lots of plans for many products,
Yeah.
but like I said, for us is two things. One is what does my core segment want?
Yeah.
So which is why used car was launched, I think October last year. We will launch credit line on UPI now because that's what fits our segment first. Um, and then at some point we will expand to other products. So I could say, what about commercial vehicles? What about credit cards? But yes, we would like to do more first on credit line on UPI. Then we want to do on the LC side. So more trade finance, inland trade to start with, and then outbound trade. Because a lot of small businesses are not getting the same service. See, with digitization, my speed of dispersing a affordable housing loan is the same speed, if not faster, than a prime loan, right?
How is that possible?
All digitization. So we start with the eKYC,
Yeah.
fetch your data, go to the bureau, fetch data based on eKYC, take combine the data, put in our scorecards, and within a few minutes, I'll tell you yes or no.
Okay. So what
Now,
this?
if you take this is state of art, right? I mean,
Yeah.
even if you were taking a 5 crore, 10 crore house or a 5 lakh, 10 lakh house, my speed is fast.
Okay.
I have to do that digitization because I have to reduce cost to serve.
Right.
If I do a lot of paperwork, so you fill in an application form, I send it somewhere, somebody will punch it in. I'm going to imagine the cost. The workforce today is also very sharp. People know how to use a mobile faster than anybody else. The tabs work very easy, right? So people are happy working on mobiles and tabs. With our Indian digital stack, I think they're very blessed that we can really turn around loans like that. By the end of the day, you will get your sanction letter, right? If your sanction is acceptable to you, right, and you sign off, then I will trigger valuation because that takes a physical visit and cost
Yeah.
and legal. So I'll get the papers vetted. If you don't accept the sanction, then those two processes don't start. There is no loss to you or to me. So that's the real process. But you think about it. Now we think that opportunity of that 1 day sanction for an affordable housing loan, which meets as good as a prime loan, if not better, is there are so many parts of MSMEs which have not been answered, which we propose to answer.
Okay.
And again, that's the advantage of a new age digitized bank. We're very focused on every segment we will do, but what we do, we would like to win in that segment.
Okay. Okay. So a little bit about you. You are the CEO of Standard Chartered Bank, the APAC division, right? How did you then transition to a position in Bangalore? So what is the entire journey? Your journey from the beginning, from college?
So I joined Citibank. I was there for about 3.5 years. I moved to Standard Chartered in November 92. I worked in India till 2000. The Gridless acquisition happened at that time. So that was a very interesting phase for us. Then the bank posted me across various Asian markets from I began with Philippines. I then went to Standard Chartered Thailand and then Standard Chartered Singapore. Then I ran as a chief executive the Taiwan business for Standard Chartered. Then I was posted in Seoul. I ran Korea, Japan, and Mongolia as a CEO for the bank. And then I became the regional CEO for ASEAN and South Asia. So that was the 24 years. I wanted to do something entrepreneurial post that because I'd
Right.
done like, by the time I'd finished Tansi, I'd done 28 years of both banking in India and overseas.
Yeah.
And I was like, I must do something more, which is entrepreneurial, more that, I can use whatever I've kind of learned over the years. And yeah, I mean, I met, then I worked with TPG as an advisor, and that kind of, gave me an opportunity to learn and see the investing world a bit, introduced me to Jana. Um, and Jana in that moment needed somebody to come in and, stabilize the ship. And I had wanted to launch the SFB because they had the SFB license. They hadn't launched it.
Okay.
Because I joined in August 17 and we launched the bank in March 18. We got great support from the regulators because that is very crucial when you're trying to stabilize the ship and launch something. We got great support from investors because you need patient investors.
You got a lot of money during that time, right?
Yes, we had to basically, fill up the gap of the past, which was a bad book, and then have some growth capital. And then you also need patient investors because you're turning from a high yield model to a medium yield model. I won't say low yield because
Right.
we never went to the low yield.
Yeah.
We always said we'll move secured. Now, and second is any business you start, it's not like I want to launch commercial vehicle, I'll be successful. It'll take 3-4 years. It's a build out, right? It's just brick by brick. It takes time. So you need people with patience and belief. So I would give um, like a big thank you to all of them that they really stood by, supported us, and unfortunately for us, from 2018 we began the journey of the bank. First time we turned profitable, COVID happened, right? And that again kind of slowed down everything for next 2 years.
Yeah.
But that's fine. I guess as you go through a tougher journey, you could probably come out stronger. So that taught us a lot.
Y- The 2016 issue, since then until Q2 of calendar year 2019, you were posting losses. So I think Q2, it was the first time in those lot many quarters that you posted a profit. Then COVID hit. That again,
We never lost money during COVID
okay.
because by that time we had turned secured.
So
40%
imagine,
of the book was secured when we entered COVID.
so in case the entire thing was still MFI.
60% was MFI for sure when we entered COVID. So which is why we had to like not make
Yeah.
big amount of money, but we were profitable. We paid for own provisions and we passed through COVID.
You coming in the transition was instrumental. Instrumental meaning it was very important because if you were still in that MFI sector, 100% MFI, coming into COVID 2020, you'd have been in a lot more mess, right?
It could have been more challenging for sure, but listen, one is, like I said, had it not been for regulator support, the investors stepping in, and of course, I got a lot of professionals to join us.
Okay.
So if you take the management team, the average financial services experience is about 25, 26 years. So there are a lot of people who have been there, done that, who really want to come up and set up something with, everything I've learned, I couldn't practice there, I'll come and do it here. So we got a very good management team. We were lucky because the organization Ramesh and team had built for us was very digitized. It was a scalable, large 22 state presence. So we were already in scale.
Okay.
We had digitization. We just needed to bring in a new model which could sit on those geographies, take the capital which could fill up the past and give us growth for the future. And we knew there is a large underserved market. Uh, when I say underserved market, it's also true for deposits, right? Would you not like 1 more % on a deposit? Who wouldn't? Right? So when people talk of underserved, it's not always people not getting loans. I'm a retired person, I would like 1 more % on my money. Why not? And there's a large proportion of that people who are happy to, get their 1% extra, 0.5% extra.
Right.
There are a lot of people who would like that. Listen, my current institution doesn't have time for me. I go to Jana and I find people are more available, better service, more smile. There is enough and more consumers who would like to have a different experience. So
Great, great. So nice listening to you, and you elaborated things really well. I had a lot of questions regarding the 2016, the 2,500 crore write down, but now you're completely transitioned. I think it's all in the past, and now you're going for an 80/20, hopefully getting the license.
so we are at 73, Sriram. So 80/20 is not far off.
Yeah.
And I think we've been through enough trouble to show how resilient we are. Now it's about just making sure that we execute well. And that's about it.
Amazing. Thank you so much, sir.
Thank
Thank
you.
you for
Thank
being
you.
here.